Good morning, my name's Ryan Littlestone from forexflow.live. Today we're going to take a different currency. We're going to look at dollar yen. This has been a very rangy pair of late. What we saw over the last couple of weeks running into the end of the month is we saw the dollar pretty much all round gaining strength. This pushed this pair back above this 108 level. And this is a level that I've highlighted on the charts for quite some time now, a very big level. If we look at the daily chart, we can see there that it's been a level going all the way back for a couple of years if you zoom out a bit. But we can see that when we've been above that and held above that, we've pushed on higher. But if we've held below that line, then we've seen further downside come in. So as I say, into the end, we've seen it in a couple of periods. Towards the end of August, we saw the price move back up above the 108 level, and we hit this fib level, the 50 fib of the April move down, around about that 108.40.50 area. That's turned into a very significant area because, again, we've tested it back in September towards the end of the month. We hit a ceiling there again, and subsequently into October, we've seen the price fall all the way back. So what that does now is it puts us back in the range between 108 and 105. And if we get above 108, then we've got this extension up to this fib level. So it's marking a double top up there and a place where we can look to go short. So what we're looking at now is we're trading around the just under 107. So we need to see if we're going to get a move down to this 105 area. Now, there's going to be various stages in the way, but the main ones I'm looking at is around 105, 50, 60, maybe up to 70. That's going to be the first line in the sand. If we break there, then we're on for another move down to 105. Now, the good thing about this pair is that it likes to range. It likes to consolidate. So when we get these developing edges, we get these ranges, and they're confirmed either by long-standing support and resistance. It gives us a good confidence to have a trade against these levels. So pretty much 108, 105 is a good area, a good range to trade in between. So while we can trade on the short term, maybe a 15, 30-minute or an hourly chart, just picking intraday moves, we also keep an eye out for these wider edges and these bigger areas because they are the ones you can trade with a pretty high conviction. But you don't need to keep a wide stop on these. You can keep them still very tight and also look for a break trade. So if you break these levels, then we can look to run maybe a buy stop or a sell stop. And a buy stop is what I had sitting in at 108.55, just in case this fib level broke. The likelihood is we'll carry on probably up towards 109. So you don't need to go out on a limb, trade both ways. Wait for the market to break, or wait for the level to hold. As they say, a level's a level until it's not. So that's what I'm looking at regarding this pair. I don't really have any fundamental direction for it at the moment. We know what the Fed's doing. They're on an easing path, or at the moment, maybe just slightly neutral. So we're probably going to see consolidation going on. Japan's had its sales tax hike, so we need to see how that affects things in Japan fundamentally. But otherwise, it's pretty much trading the levels we see on the chart. I'm happy to trade, scalp the news and the intraday levels. But what I will stick to is these big levels that we see on the chart here. So down to 105 and into 105, I'll be a buyer. Again, up into the 108 and that fib level, I'm a potential seller. And we'll see how the market develops and where it goes from there. And as for this week, I wish you good luck with your trading.